Yes, sorry for being late. We are discussing economic substance regulations, and the topic is refreshes and comparative analysis. In this table of contents, we will be discussing economic substance, reasons of implementations of ESR in UAE. Then we'll go to the reasons of revising law and related regulations. We look into the scope of ESR as well. Then we'll discuss the compliance requirements, and then we will see implications of non-compliance, and we will look into the way forward as well. At the end, we will have a question and answer session. So let's start the discussions. What is economic substance? Economic substance is the doctrine that developed that substantial purpose of entering into the transaction. An entity must have a substantial purpose of entering into the transaction. In case there no substantial purpose of entering into the transaction, we will say there no economic substance. Moreover, we will say that entity cannot attract artificial profit. This is the reason that we are required economic substance. Reasons of implementation of economic substance. The reason of implementation was BEPS, and BEPS stand for base origin and profit shifting. Base origin means reducing the taxable base in high tax jurisdiction, and profit shifting means increasing the taxable profit in the low tax countries. So means whenever the entities are increasing the tax base in the low tax countries and they are decreasing the tax base in the high tax country, then we can say this is called BEPS. Examples of the BEPS are that there is the high interest rate loans are being granted by a company which is in high tax jurisdiction to lower taxable profit in the high tax jurisdiction. There's another example as well that ownership of the intellectual property is being transferred from the high tax jurisdiction to the low tax jurisdiction to increase the taxable base in the low tax jurisdiction and to decrease the taxable base in the high tax jurisdiction. This technique, as per the data of OECD, there's a loss of revenue of 100 billion dollar to 240 billion dollar. And to control this loss of revenue, that they said OECD has issued BEPS. The BEPS stand for base origin and profit shifting. Then G20 countries came in between. Then UN came in between. European Commission came in between. Finally, they have decided 15 BEPS action points. These are the 15 action points of the BEPS, which is available on the OECD site as well. So out of the 15 action points, these minimum 4 are the mandatory points. And out of this, ESR falls in the harmful tax practices. So to implement the decisions of OECD, Cabinet Decision 31 of 2009 was introduced, which was replaced by CD 57 of 2020. And in the same way, the guidance 215 of 2019 was replaced with the decision 100 of 2020. So in short, say we can, there's a loss of revenue due to the BEPS. There is a tax evasion due to the BEPS. BEPS 15 action points were agreed by the OECD and G20 countries. Out of this, 4 were the minimum standard point that was required to be implemented by each member state of OECD. So out of this 4, point number 5 is harmful tax practices, and the economic substance regulations is part of the point number 5, harmful tax practices. UAE cabinet decision 31 was replaced with 57 of 2020, and guidance 215 of 2019 was replaced with the 100 of 2020. So this was the reason that ESR came in UAE. So what are the factors behind the revision of law and related guidance? The factors initially, if we're taking a very high level world overview, that we can say in the old Decision 31 of 2019, there were total 19 sections. In the revised decision, there are 22 sections. These are the key area where the changes have been made. There was no concept of national assessing authority in the previous cabinet decision, which has been introduced. Moreover, the provision of information by the regulatory authority, then this hierarchy has been changed, how this information will flow. These were the key areas where the changes were introduced. So major reasons for revision are that bring consistency among the various regulatory authorities. We have already noticed that there were around more than 30 regulatory authorities, and each regulatory authority had its own timeline to submit the notification. Then they were monitoring the implementing the economic substance at their own level. So just to control this, they have decided to bring the harmony, and they have made this decision centralized to provide centralized platform for the entity to submit the notification, along with this better monitoring and compliance to bring the harmony with the global ESR law as well. So these were the major factor. Due to this, ESR related law and guidance were revised. Scope of ESR. So if I'm saying what is ESR at very high level, I'll say if licensee earns income, if the licensee earns income from the relevant activity, they must satisfy the economic substance test first. Second, they need to submit the notification, and third, they need to submit the report as well. These are the three key requirements, and this is economic substance regulations. So these are the comparative analysis where the changes have been made. First of all is the investment fund. There is no concept of investment fund in the previous law, but right now in the revised law, investment fund has been introduced. They said investment fund so entity whose principal business is issuing of investment, oh sorry. So issuing of investment interest and investing the funds for the benefits so that the investor will be able to make some sort of profits, gains, and the entity through which these funds are being invested, it will be subject to ESR, and the entities in which these funds are being invested, these will not be subject to ESR. M&E group into definition has been introduced. There are no concept of M&E in the no proper definition of M&E in the previous cabinet decision, but in the revised cabinet decision, they said two or more entities which are into different tax jurisdiction or within a parent company and branches in different tax jurisdiction. So it will called as M&E group. The concept of unincorporated partnership was introduced as well. If this is limited partnership, which is not a juridical person or general partnership, they're registered in the state. So they have introduced the definition of unincorporated partnership as well, while the previous cabinet decision was silent about this. Relevant income, in case of relevant income, they said they have properly classified the relevant income. They said all gross income that is recorded into the books as per the accounting standard, this is called a relevant income. Might be this income is being in UAE, out of UAE, might be the business are making profit, making losses, might be they are deducting any cost, but we need to book the income at the gross value. So they have defined the definition of relevant income as well. So connected person, it was initially natural person was being considered as a connected person, which has been removed. Now they said an entity which is a part of the same group as a licensee or an exempted licensee, it will be considered a connected person. Group has been defined properly as well. In the group said two or more entities through which ownership controls are they required to prepare a consolidated financial statement. This is called group, and group has been defined properly in the revised ESR law and guidance as well. National Assessing Authority, as we discussed, it has been introduced. So National Assessing Authority will be acting in between the regulatory authority and the competent authority, which is Ministry of Finance. Branches has been defined properly. They said branch is a legal personality. This is the extension of the parent entity. This is not a separate legal entity. So it has been defined properly. Direction and a management test in the old guidance, there was a requirement that businesses minimum needs to have one meeting, which has been removed. Now it has been said that that meeting to be held in UE is now removed, but they need to have a meeting as per the applicable law. The word consolidated financial statement has been introduced. This is financial statements of the group which are required to be prepared ultimately by parent company. So this is called my consolidated financial statement as well. So these were the definitions. There's some more as well. The parent company has been defined properly. There were no concept of parent company in the previous law. This entity which holds the voting rights, which controls the voting rights, which appoints or remove majority of the board of directors, and which entity which has dominant direct influence or control over the licensee or exempted licensee. This is called parent company. So ultimate parent company has been defined as well. This ultimate parent company means an entity of a group which is required to prepare the consolidated financial statement under the accounting standards, or if this is required by trade company that trading on the public security. So these are the requirements that ultimately parent company has been defined as well. So ultimately, beneficial owner has been there. Initially, an individual was being considered, an entity was being considered as ultimately beneficiary owner. But in the revised ESR law, they said an individuals who owns 25% or more of the share capital, they have removed the entity from the definition of ultimate beneficial owner. Out of all these definitions, the most important is licensee. Licensee, they have defined it. They said initially a natural person was being considered as a licensee, and government entities or entities which are at least held 51% by the government, these were being considered exempt. So natural person was being considered as licensee. Entities which are being held at least 51% by the government were exempt. Now they have changed the definition. They said licensee is only a juridical person, means they have removed the natural person out of the definition of licensee. They said the unincorporated partnership but with no legal personality. So they said either this is registered in the state, including a zero rate and including a free zone, financial free zone, and carrying a relevant activity, it will be considered licensee. But there are some exemptions of the licensee. These exemptions are if the licensee is an investment fund, it will be exempt. Licensee is a tax resident in a jurisdiction other than the state where the income of the licensee is being taxed there, it will be out of the scope. A licensee which has a business only in UAE, which is not part of the MNE group, and the owners of that business are a resident in the state, then it will be considered exempt licensee. And licensee which has a branches in UAE, all these branches will be out of the scope as well. And licensee determined to the decision of Ministry of Finance, it will be out of the scope. It has been given in the frequently asked question that sole proprietorship, trust, and foundations will be out of the scope as well. It will be considered an exempted licensee. So we can say ESR is not applicable on the natural person, first of all. Second, we can say ESR is not applicable if the entities are not earning relevant income. ESR is applicable on the entities even held 51% by the government as well. So notification required to submit, they will have to prove the reasons of not subject to ESR. Exempted licensee, they will have to give the exempted licensee, they will have to give the reasons due to which they are not subject to ESR. Sole proprietorship, as we discussed, it will be out of the scope of ESR. So if we are summarizing the discussion, we can say there is a ESR. In this ESR, there is a natural person, or it can be a juridical person as well. If this is a natural person, it will be out of the scope of ESR. If this is licensee, juridical persons or unincorporated partnership, it depends this juridical person or unincorporated partnership, they are earning any relevant income. If they are not earning any relevant income, it will be out of the scope as well. If they are juridical person or the unincorporated partnership, if they are earning any relevant income, then we need to look into this. It falls under the exempted licensee category, or it doesn't fall under the exempted licensee category. If they fall under the exempted licensee category, they will be required to submit the notification. Notification is compulsory for the exempted licensee. If they will not be submitting the notification, it will be treated, they will be treated like a normal licensee. The same way, non-exempted licensee as per law might be they are earning relevant income during the year, might be they have not earned any relevant income during the year. If they have not earned any relevant income during the year, then they will be required to submit the notification, but they will not be required to submit the they will be not be required to satisfy the ESR test, and they will not be required to submit the report as well. So in case of they have generated relevant income as well. So I can summarize that if this is a juridical person, if this is the unincorporated partnership, this is not an exempted licensee, they have earned a relevant income during the year, then we can say that ESR test will be applicable. They will be subject to ESR notification, ESR test, and ESR report as well. Branches has been defined very properly in the revised law. They said branches can be in the UAE, it can be out of UAE. Basically, sorry, the branches have been defined properly in the law. The UAE entity might have a branches in UAE, might be UAE entity has branches out of UAE. In the same way, foreign entity has a branches in UAE, or might be they have branches out of UAE. If the UAE entity has branches in UAE, they said all branches will be out of the scope. ESR will not be applicable on it. If the UAE entity has branches outside of UAE, then we need to check either this branch income is subject to tax in a jurisdiction out of UAE. If the income is subject to tax there, then it will be out of the scope. Otherwise, it will be subject to ESR. In the same way, for the foreign entity, if the foreign entity has branches out of UAE, it will be out of the scope. And if the foreign entity has branches in UAE, then again we need to assess their income is subject to tax out of UAE or not. If their income is subject to tax out of UAE, it will be out of the scope. Otherwise, it will be subject to ESR. They have written one more line in the revised guidance also, that if the entity is merely paying withholding tax out of UAE, based upon this, we cannot say the entity is a tax resident in the respective jurisdiction. Exchange of information, licensee, regulatory authority, then in between national assessing authority came, then competent authority and foreign competent authority. This is the hierarchy, revised hierarchy and revised layers. Licensee will be providing majority of the information to regulatory authority. Regulatory authority will providing to national assessing authority, then competent authority, and then it will require to the foreign competent authority. They have given the regulatory 36 regulatory authorities has been given on the Ministry of Finance website. You can check it there. What is the role of authorities? Role of authorities, it can be a regulatory authority and national assessing authority. Role of a regulatory authority is collecting information, reviewing a notification, assessing the documents, implementing the decision of the Ministry of Finance and National Assessing Authority. While the role of National Assessing Authority is undertaking assessment, impose penalties, deciding appeals, getting reporting, and implement the decision of Ministry of Finance. So next is relevant activities. There are no change in the number of relevant activities. In the previous guide, there was 9 relevant activities. Previous law, there was 9 relevant activities. In the revised law, there are 9 relevant activities as well. But in some activities, they made the changes we'll discuss in detail. The first activity is banking business. There no change in the banking business, and the concept is same, definition is same. There, if the banking business, they are accepting deposits and giving loans, advances, overdraft guarantee, are making investment for the at the risk of the licensee, then it will be considered banking business. Otherwise, it will not be considered banking business. They say they must be regulated. Moreover, they said financial intermediaries will not be falling within the scope of ESR. They said duplicating reporting will be avoided as well. So on overall basis, we can say that if the bank is accepting deposits, bank is giving loans, overdraft guarantees, or making investment, then it will be considered that the bank is involved in the banking business. Otherwise, we'll say bank is not involved in the investing business, sorry, banking business. So these are some examples. They said AB Bank, this AB Bank is offer saving account and loans, means the bank is accepting deposits and offering saving accounts and loan. Yes, it will be subject to ESR. In the second example, there is a branch of a bank which is licensed to accept the deposit, but the bank is not giving loans, so it will not be subject to ESR because bank is not satisfying the second condition of ESR. In MNO is a UAE branch, and this branch is only providing account opening advices. Bank is not accepting deposits, not giving loans, so it will not be subject to ESR as well because the second condition of making investment is not being fulfilled. No, sorry, the bank branch is not accepting deposits and they are only giving loans. So first condition is not being fulfilled, so it will not be subject to ESR. Insurance business, there no change as such in the insurance business as well. Same concept is there, same definition is there. They said accepting risk by offering or carrying our contract of insurance both in the life and non-life sector. The conditions are companies are accepting risks. Second condition is the companies are carrying out contracts in its own name. If these conditions are being fulfilled, then we will say that the sorry if we can say then the company is in the insurance business, then ESR will be applicable. Otherwise, we'll say ESR will not be applicable. So this life contract can be in the life insurance, it can be in the non-life insurance as well. So it can be reinsurance and captive reinsurance contract. ESR will be applicable on those as well. So what is captive insurance means? This is captive insurance means insurance which is wholly owned and controlled by the insured by owner. Usually their owners are making insurance company for themselves. So captive insurance will fall under that. Again, it will be a regulated business. Middlemen will not be subject to ESR and duplicate reporting will be avoided. Examples, insurance company accept the risk and is a regulated insurance company. Yes, it will be subject to ESR. And companies acting as an intermediary, we just discussed, it will not be subject to ESR. Investment fund management business, there are no changes in the investment fund management business as well. They said if the fund is providing discretionary investment management services, if the fund management business is providing discretionary investment management services, then it will be subject to ESR. Otherwise, it will not be subject to ESR. And these discretionary investment management services are fund managers are taking decision without the involvement of the client. So any services like fund administration, custodian, investment advisor, all these back office services, it will not be subject to ESR. Fund itself will not be subject to ESR. However, if the fund manager and the fund are the same party, then it will be subject to ESR. So I have put it into this diagram that investment fund services, these investment fund services, they will be non-management services. We have just discussed it will be out of the scope like administration, custodian, investment advisory, all this will be out of the scope of ESR. And if the fund management services are being provided, like making investment, divestment, and risk related decision, then we need to look into this. These services are discretionary or non discretionary services. If these services are non discretionary services, then it will be out of the scope of ESR. And if these services are discretionary investment fund management services, then it will be subject to ESR. Here's an example. There's a one fund, T fund. This is a partnership with the TLLC. So T fund is there. T fund has a partnership with TLLC. TLLC has appointed two parties. One is MLLC. Second is Neo LLC. This Neo LLC is providing administration services for this fund. So they said it will be out of the scope we have just discussed. MLLC is providing investment fund management services. For T fund, it will be subject to ESR. TLLC has delegated all its 100% powers to MLLC, so it will TLC will not be subject to ESR. Only MLLC will be subject to ESR in this category. Yes, Neo LLC, which is providing services to a fund which is based in UAE, it will not be subject to ESR. However, if this fund is based out of UAE, then Neo LLC services can fall under the distribution service center. We'll look into this service center business in the later stage. Lease finance business, there are no as such changes in the lease finance business as well, but they have given some more clarification. They said the definition is the same. If the licensee is offering credit or financing for any kind of consideration, then it will be subject to ESR. If the financing or the credit is being offered without any consideration, then it will not be subject to ESR. They said it includes intra-group financing as well, which is subject to ESR, subject to the condition consideration is there. So it includes making loans to related and unrelated parties, entering into finance leases to other than the land. If the land is being unfinanced, then it will not be subject to ESR. If any other asset is being again on finance lease, then it will be subject to ESR. Companies are providing credit for the hire purchase agreement, long-term credit plans, or other long-term financing. It will be subject to ESR. Assuming one company is giving a credit for 5 years, so definitely this is the financing, it will be subject to ESR. If the credit is being given for less than 1 year, so we'll say this is not a financing, these are pure payment terms, so it will not be subject to ESR. Moreover, they said if the cash is being pooled, cash pooling arrangement is there, and the licensee is getting consideration for this cash pooling arrangement, it will be subject to ESR. Is it no consideration, no lease finance businesses? Consideration may be in the form of fee gain as well. If investment is being made in the bonds and similar securities or debt, these are traded on the regulatory exchange, then it won't be considered that the licensee is involved in the lease finance businesses. So on overall, we can say that no as such changes, except one thing is there. It was given in the frequently asked questions in as per the previous law, that if the assets are being given on lease, it will be subject to ESR as well, which they have removed. Now, if the assets are being given on lease, it will not be subject to ESR. Cash pooling will be subject to ESR. Rest, everything is same. So loan to subsidiary with 10% interest, yes, consideration is there. Intra-group loan, it will be subject to ESR. Assigning loan without interest, no consideration, no ESR. Normal payment terms and late payment interest. If the company is getting a late payment interest, they said if intention of the licensee is not make money through the interest, so it will not be subject to ESR. The last definition, the centralized treasury department, they have got a loan, they have disbursed the loan to the different units within the same group. From the unit, treasury department is getting interest. Even this is a back-to-back arrangement, still it will be subject to ESR. Headquarters business, there's no change in the headquarter business as well. There's that services to foreign group company. And through these services, licensee is taking the responsibility for the overall success of the group, or licensee responsible for the overall group performance, then it will be subject to ESR. If the licensee is not subject to the responsible, if the licensee is not responsible for the overall success, if the licensee is not responsible for the overall performance of the foreign group company, then it will not be subject to ESR. They have clarified it how the licensee will take the responsibility for the performance and success. They said licensee would be providing them senior management services. Licensee would be involving in taking the assumptions and control to manage the risk and related activities, or licensee would be given substantive advice in regard to the assumption and control of such risk. If the licensee is providing these services, then we can say the licensee is taking the responsibility for the overall performance and overall success. Then it will be subject to ESR. Otherwise, it will not be subject to ESR. And it doesn't matter who is sitting at what place in the group. Might be subsidiary doing all these activities, might be parent companies doing, might be any branches doing. If anyone is doing all these activities for a foreign group company which is based out of UAE, then it will be subject to ESR. There are no changes as such as we discussed in this. In the example, they said group supporting multinational group entity. There's a PLLC which is based in UAE. This UAE PLLC which is based in UAE. This PLLC is providing senior management team services and providing strategy directions, managing risk. All this, so we can say yes, it will be subject to ESR. In the second example, they said there's one company FGH in UAE. This is a part of the UK company, and this UK company has one more subsidiary in KSA as well. So UAE company is providing services to KSA subsidiary. This is they are basically, they said they are taking certain rights, influence in respect of management. They are providing management. All these things they are providing, but ultimately the subsidiary which is based in KSA, this subsidiary is taking directions from the head office from UK to manage and control the risk. They said since the directions is coming from UK, so UAE company will not be considered that the UAE company is providing headquarters services. So it will not be subject to ESR. Shipping business. In the shipping business, licensee has one or more ships. So basically, if the licensee is operating ships in the international traffic, then it will be subject to ESR. If the licensee is not operating ships in the international traffic, then it will not be subject to ESR. So the defined ships can be, it can be shipping vessels, it can be small vessel which can carry less than 10 tons, layer vessels, cruise ships, or private yachts. So it doesn't matter who is the owner of the ship. We need to see what the licensee, who is operating the ship. Ship operator will be subject to ESR. And if the ship operator is providing other related activities like renting of the charter ships, sale of tickets, use, maintenance, and rental of containers, provide management of the crew of the ship, if all these activities are being provided by the licensee which is operating ships, then it will be subject to ESR. If the licensee is only providing sale of tickets, if the licensee is only providing management of crew of ships, then it will not be subject to ESR. Moreover, they said the chartering of the ships and giving the bareboat on lease, it will not be subject to ESR because the person who is chartering out the ships means the person is not operating the ship. They are just chartering out the ships and be chartering out the bare boats. So it will not be subject to ESR. Might be they will fall under the lease finance business, but they will not fall under the shipping business. So all the middlemen like the companies or licensees which are arranging travel agencies, international shipping agencies which are selling tickets, they will not be subject to ESR, along with entities which are arranging goods which are being shipped. So it will not be subject to ESR. We need to stick to the basic definition and the basic, sorry for this. And the basic definition is that the licensee is involved in operating of the ships in the international traffic, in the international area. If the ships are being operated within the UAE, it will not be subject to ESR. If they're being operated out of the UAE, it will be subject to ESR. And definition of the ship we have already discussed. There are no changes other than this. So operate ships from UAE to other GCC countries. Water LLC, yes, it will be subject to ESR. So Sailor LLC is only providing crew management services. They said it will not be subject to ESR. This charter LLC is the owner of the ship. This charter LLC is providing the ships, chartering out the ships to Cargo LLC, and Cargo LLC is operating the ships in the international traffic. Yes, they said Cargo LLC is operating the ships in the international traffic. It will be subject to ESR. Charter LLC is only chartering out the ships. It will not be subject to ESR. Holding company business, there are some major changes in the definition of holding company business. Initially, they said holding company business licensee must be a holding company as per the related law which has been removed. So it means if now any company which is not holding company as per law, this company can be involved in the holding company business as well. Secondly, they've removed the word primary. They said sole function of acquisition and holding of shares. So they will include the word sole function of acquisition and holding of shares or equitable interest, and that they only earns income from the dividend and capital gains. If these conditions are being fulfilled, then it will be considered that the licensee is involved in the holding company business. Otherwise, it will be assumed that the licensee is not involved in the holding company business. Moreover, they have removed it, does not carry any other commercial activity. So now there are major changes. Based upon these changes, we can say straightforward that if the licensee, the sole function of the licensee is to make investment in the equity or equitable interest, and they are earning dividend and capital gain from this, then it will be subject to ESR. Otherwise, it will not fall at least under the holding company ESR. Equity, they have defined equity investment, share, equity partnership. Then if the company is involved in the holding company business, then they will be required to reduced economic substance requirement we'll discuss in detail. So major change in the holding company business that we discuss, except this, there are no changes. This chart has been given in the revised guide as well, and I have classified this chart into this diagram. I said if the holding company is doing investment, it has investment assets, it can be in tangible assets or it can be in intangible assets. These investment in tangible assets might be in immovable assets or movable assets. If the investment is immovable assets, they said income from immovable assets is not subject to ESR. If the holding company has an investment in the movable assets, then the income from the sale is not subject to ESR, and income from the lease is subject to ESR. Moreover, this is intangible assets. If the investment in assets and assets are intangible assets, yes, if this is the intellectual property and the licensee can identify separate identifiable income, then it will be subject to ESR. Otherwise, it will not be subject to ESR. So far as investment in equity is concerned, investment in equity only, if the company has only investment in equity, it will be subject to a reduced economic substance requirement. So company will not be subject to CIGA, no sufficient expenses. If the company has investment in equity, other relevant activity, then we need to assess other relevant activities, high risk IP business or non-high risk IP business. If high risk IP business is there, then it will be subject to enhanced economic substance requirement. If this is not high risk IP business, then the company will be subject to full economic substance requirement. In case the holding company is doing investment in equity along with the company is managing non-relevant activity, law is very clear. Law said it will not be subject to ESR. Moreover, they said real estate owned by the licensee that are solely used for the purpose of holding company business, they said it can be classified based upon this that the company is doing holding company business. These are the examples. Only dividend income from subsidiaries, yes, it's a holding company business. Holding shares and conducting non-relevant activity we just discussed, it will not be subject to ESR. Holding shares and giving loan giving is falling under the relevant activity lease finance business. So we need, it will be subject to full economic substance requirement. Lease finance business clause would be applicable. One company is acting as a trustee. Their company is acting trustee. They are saying this company is acting as a trustee. The company is not doing the holding company business because the trustee is not investing any amount into the equity or equitable interest. So it will not be subject to ESR. Intellectual property, there are no changes in the definition of intellectual property asset. They said, what is intellectual property asset income? They said, intellectual property business. What is intellectual property business? Business which holds, exploits, or receives income from the intellectual property asset. This is called intellectual property. Means if the company is earning income from the intellectual property, then we can say the company is involved in the intellectual property business. So what is intellectual property asset that defined? It can be copyright, patent, trademark, but the licensee must have separately identifiable income. Then it will be considered intellectual property asset. And the income can be in the form of royalties, franchisee, licensee fee, or capital gains as well. So this is called my intellectual property income. There are changes in the intellectual property business as well. They initially there were two conditions there. They have removed one condition out of them, and this one condition has been removed. Now they said if the licensee is carrying out intellectual property business and this intellectual property asset has not been created by the licensee, but the licensee has taken this intellectual property asset from the connected person, or the licensee has funded any research and development out of UAE, and through this licensee has got the intellectual property asset. Then they said if this asset is being given to the connected person are sold. Initially, word sold was not there. Now they have inserted the word sold as well. So if this asset which has been not created by the licensee, asset has been taken from the connected person, or asset has been taken through the funding of the research out of UAE, this asset is being leased, licensed, or being sold to the connected person, or this asset is being given to a foreign connected person, then it will be considered licensee is involved in the high risk IP business. Otherwise, it will be considered that the licensee is doing non risk IP business subject to the condition income from the relevant intangible assets is identifiable. So I'm repeating. So if the asset has been taken, has not been created by the licensee, taken from the connected person, or the asset has been taken through the funding of the research and development out of UN, this asset is being sold, or this asset is being licensed to the connected person or exploited to a foreign connected person from that licensee is earning income, then it will be considered that the licensee is involved high risk IP business. Otherwise, if the licensee is holding any intellectual property asset and from that asset licensee can earn separately identifiable income, then it will be considered that the licensee is doing a normal intellectual property business. Last line, as I said, it was the second condition related to the basically funding, development. All this condition has been removed. It has been made more simplified. So I have put it into this diagram that if intellectual property asset, you have a right, you can earn gross income separately, identifiable gross income. Just the possibility income is not separately identifiable, income is separately identifiable. If the income is not separately identifiable, then we can say the licensee is not involved in the intellectual property business and ESR will not be applicable. And if the licensee can identify separately identifiable income, then we need to look into this that the asset is high risk asset, high, then we say licensee is involved in the high risk intellectual property business, or a licensee is involved non-high risk. If the licensee is involved high risk intellectual property business, then by default licensee will be deemed to fail the test. Licensee will have to provide all this information, development, enhancement, maintenance, protection, exploitation, to National Assessing Authority. National Assessing Authority by default will provide this information to the competent authority, which is called Ministry of Finance. Ministry of Finance by default will provide this information to the foreign competent authority. foreign investment competent authority. So all these licensee will have to provide business plans, evidence of employees, evidence of assets, evidence of direction and management. All these things the licensee will have to provide to refute the information assumption that licensee is by default not complying ESR test. On the other hand, if the licensee is not involved in the high risk IP business, then it will always be assumed that the licensee has satisfied the ESR test. In case regulatory authorities are asking anything, then the licensee will provide, otherwise licensee will not provide them. CIGA for the intellectual property business. CIGA says that there is possibility the intellectual property asset is a patent or similar asset, then CIGA will be research and development. If the intellectual property asset is marketing intangible, then the CIGA core income generating activity would be branding, marketing, and distribution. These are the examples that licensee company holds a brand, non-high risk IP business, and from this licensee is getting a royalty. Yes, non-risk business because they said their rights for which license to other in the royalty. Let's say within the scope of intellectual property business, separately identifiable income is there, and the asset has not been got from the foreign connector. What the definition we have already discussed. So it will be considered licensee is involved in the business. So holding trademark and for business purposes, so not is the holding trademark, suppose Crest Cooper is holding this trademark. We are using this for business purposes. We are not doing intellectual property business. Non-risk is for business holding IT software, earning identifiable income. The software company has IT software from the software, the separately identifiable income. Yes, it will be subject to ESR, but this is non-high risk. In the same way, pharma company, they said the pharma company has gross income from the licensing is patent that they have received from Egypt, KSA. Now this is fulfilling the definition. They everything they got it from the out of UAE, so it will be considered high risk IP business. Distribution and service center business, these have been changed. They said distribution. Initially, there was a condition of importing and storing the goods in UAE, which has been removed, and selling the goods outside the UAE, it has been removed. Now it has been straightforward, make very clear that if you are getting the goods from the foreign connected person selling anywhere in the world, it will be subject to ESR. In the same way, service sector, services to foreign connected person, it has been removed in connection to the business in UAE. So even now, services are being provided to the foreign connected person for a business which is outside of UAE, inside of UAE. In both of the cases, it will be subject to ESR. But if one-off services are being provided, these one-off services will not be subject to ESR. These are the examples: buying furniture from the foreign group company and selling. Yes, their company is doing distribution business. Export of services to a group company. Yes, the company is providing service center business. In the third category, the company, UAE company, is providing one-off services to its subsidiary in KSA, which are part of the same group. So this is a one-off service. It will not be subject to ESR. ESR compliance notification, test, and reporting is there. This is ESR notification. Submit the notification through the portal, which will be introduced by the Ministry of Finance. This is a new thing. Timeline within 6 months from the end of the relevant financial year. Notification, licensee will not submit the notification, then it will be assumed a normal licensee. So this is a new requirement. Moreover, they said non-licensee will be required to submit the sufficient evidence as well for the specifically for the exempted licensee. This is a notification. Notification timeline is there. If your year is 31st December 2019, then you need to submit the notification maximum by 30th June 2020. If your year is ending after 31st December, suppose on 31st March or 30th June, then this is option for you that you can submit the notification by 30th June. This is optional. Authorities may allow you, but if you will not comply, it will not be subject to fine. ESR test is there. We have discussed ESR notification. We have discussed the notification. Now test is there. In the ESR test, there CIGA test is there. Direction and management test is there. Adequacy of employee test, adequate operating expenditures, and adequate physical assets. These are the requirement to satisfy the ESR test. So first of all, a CIGA test will say, and all these tests can be classified into three categories. One is functional test, second is management test, and third is adequacy test. For the functional test, they said your core income generating activity should be in UAE, and there are no change as compared to the previous version. For each relevant activity, this is the list of core income generating activity, which I'm calling CIGA. CIGA stands for core income generating activities. Sorry for it. On the next stage, there's a headquarter. These are the all relevant activities. Now, ESR test for the holding company. We have already discussed holding company can be reduced ESR test. It can be full ESR test or enhanced ESR test. We have already discussed here investment in equity only, here investment in equity and other relevant activity, here investment in equity and then high risk IP business. So their requirement will be accordingly. If this investment in equity and non-relevant activity, then it will not be subject to ESR. Outsourcing, yes, CIGA activity can be outsourced. The outsourcing requirement imply expenditure on premises of the person to whom these activities are being outsourced. They should be in UAE. It will be the basic and primary responsibility of the licensee to supervise the ability and to make sure that the outsourcing provider has all this CIGA implies expenditures, reporting everything on timeline. This is the primary responsibility on the licensee. Moreover, they said the resources hired by the outsourcing service provider, it will not be considered two times one resource. It will not be considered double counting. Moreover, they have highlighted this is not a new thing, but they have highlighted that some activities which are sporting activities can be outsourced out of UAE. It means sport activities, CIGA is not mandatory, should be in UAE. It can be outsourced out of UAE. Even you can keep your employees out of UAE, we'll discuss in detail. If the employees are out of the UAE, they can be based there, but when the relevant activity being performed in UAE, the employee should be in UAE, and employer or licensee should bear the cost of the employee as well. So it is also acceptable. So direction, management and direction, they said for the meeting, there should be adequate meeting in UAE, quorum should be there, members should be physically present there, licensee is managed by shareholder, all the then measure responsibility. Adequate meeting as required by the law. Minutes should be in writing, signed by all, making of the strategic decisions, it should be part of the minutes. Minutes should be kept in UAE. So all this, moreover, they said that the relevant director must have knowledge and expertise as well. So this is my management and direction. Adequacy test, they need to have adequate employees. Employees can be employed by the licensee, employed by the third party, temporary or long-term contract as well. Adequate operating expenditures in UAE, adequate physical assets in UAE. So we have discussed three major. It was CIGA, then we discuss direction and management test, then we test adequacy test. If all these conditions are being fulfilled, then we can say the licensee is satisfying the ESR test. Okay, otherwise licensee will not satisfy the ESR test. So to assess whether the ESR test requirement has been met or not. So they said maximum their timeline for 6 years to assess by the National Assessing Authority, which is FTA, that the licensee has met the ESR test. But in case of gross negligence, fraud, or deliberate misrepresentation, that 6 years timeline is not applicable. So minimum 6 year retention of the record. They have given more. They have given this basically in the law. Initially, it was a part of the guide. Now they have given a part of the law that licensee is required to maintain record at least for 6 years. Reporting requirement, there are no changes in the reporting requirement except this one line we'll discuss. They said licensee who carried out a relevant activity, they need to submit the ESR report maximum within 12 months from the end of the relevant financial year. So if a relevant financial year is ending on 31st December 2019, the reporting timeline is 31st December 2020. There are no other changes. Type is there, amount, expenses, location, full-time employees, state core income generating activities. The declaration, this is important in licensee satisfying the economic substance test. Declaration, licensee will refute information related to the high risk IP business. So all these things are there, except one thing has been added there, financial statement. Licensee will be required to provide the financial statement along with the report. Might be this is the audited financial statement, might be this is the unaudited financial statement. Law is silent regarding this, so we can assume this. This is the audited financial statement. By following a conservative approach, we need to get the audited done as soon as possible, and we need to submit the audited financial statement as well along with the ESR report. Implications of non-compliance are there. Penalty section has been revised as well. Fails to submit the notification. Initially, penalty was 10,000 to 50,000, which has been make constant. It will be 20,000. Fail to submit the report, fail to submit the related document, fail to submit related information, and then penalty of 10 to 50,000. Now for the first year it will be 50,000, and for the immediate subsequent year it will be 400,000. Fail to satisfy the test, initial penalty was 10,000 to 50,000. For the second failure, 100,000 to 300,000, but it has been revised. First year it will be 50,000, immediate subsequent year it will be 400,000. Internationally provide accuracy, intentionally provide inaccurate information. Initially penalty was 10,000 to 50,000. Now it has been fixed to 50,000. Persistent non-compliance, there is the chances of cancellation of the license as well. Way forward, I can say this is the last thing that we're discussing. Way forward, reassess impact assessment based upon the revised law and related guidance. Then you will be required to submit a notification on the FTA portal as well. So just go for the reassessment, re-impact assessment, as well as you need to look into this. Keep monitoring the FTA portal, Ministry of Finance. As soon as portal is being launched, you will be required to submit a notification as well. We have already discussed what is the requirement of notification and which businesses this is applicable. Work on the documentation. This is specifically applicable for the exempted licensee, because the exempted licensee, these exempted licensee, it has been very clearly written in the law. If in case of exempted licensee, they will be required to submit the notification, and in case they are not subject to ESR, like the exempted licensee, they will have to provide the information on which basis they are exempt from the ESR, because we already discussed exempted licensee are earning relevant income, but these are not subject to ESR. So suppose if they are based upon this, that they are not subject to ESR because their income is subject to tax out of UAE, they need to bring the tax residence certificate from the respective country. Might be they need to bring any other return, other document which will reflect their income is being subject to tax there. Anyway, exempted licensee, they will have to provide the information. They will have to provide the reason of not being subject to ESR. As I discussed, audit is the new requirement in the ESR reporting. You need to have the product audit report as well. By following a prudence concept, by following a conservative approach, you need to have proper audit report. Might be authorities will ask for the audited financial statement. Requirement to ESR test as well. We have discussed there are three requirements for the ESR test, and these three requirements are that first is CIGA test, second is direction and management test, and third is adequacy test. You need to make sure if your business is subject to ESR, then you need to fulfill all those requirements to avoid the fines and penalties. Thank you very much. This is over from my side, and I think there was some sort of mismanagement as well in the very beginning. I don't know. Anyway, apologies for this. So if you have any questions, we can discuss it. Okay, I have received two questions till now. The first question is, as an auditor, how do we identify a group company that is required to consolidate accounts? Okay, the law is very clear regarding this. Law said a requirement of the consolidation, it will be as per the applicable accounting standards, and if accounting standards require that you need to consolidate the account, then you will be required to do this. Otherwise you will not be required to do this, and this will not be applicable on you. Second, they said in case of company licensed by residents, they said in case of a company licensed by residents, they fall under exempted category. No, exempted category, we have discussed three definitions are there. First of all, residents must be of UAE. company is not part of the M&E group. Third is company is doing only business in UAE. If these three conditions are being fulfilled, then we'll say the company is exempted licensing. They fall under exempted. As per your presentation, all exempted category have to submit a notification stating that they will fall under exempted category, means all licensees have to submit ESR notification. Yes, I have given this in the chart at the very beginning. I can go back it very quickly for you. Yeah, this chart, you can look into this. This is very clear. See, first of all, a natural persons are not subject to ESR. We have set aside. Now it comes under the juridical person or unincorporated partnership. Now, in the juridical person, we need to look if this juridical person or legal business unincorporated are earning any income. If they are not earning any income, we'll keep it aside. It will not be subject to ESR. Now, if the juridical person is earning any income, and this income, whatever the juridical persons are earning, if this income, we need to assess this income is being earned by the exempted licensee or non-exempted licensee. If exempted licensee, it will be subject to ESR. If non-exempted licensee, they have not made any income during the period, still they will be subject to notification as well. So exempted licensee notification is compulsory for the exempted licensee. Okay, and okay, one more question is there. What about the notification that has been already filled before revised ESR regulations? Okay, whatever has been filled, these notifications uh, are no more valid, I can say, because revised law has come, revised regulations have come, and this revised regulations are applicable from backdated. Since this revised law, revised regulations are applicable for backdated for the time being for this year, we need to submit the notification as soon as portal will be launched by the Ministry of Finance. But in the future, we will have 6 months maximum. We will be required to submit the notification within 6 months from end of the relevant financial year. And we have just discussed if the financial year is ending on 31st December, then we need to submit a notification maximum by 30th of June. And in case our financial year is ending after 31st December, suppose 31st March or 30th June, then we may submit the notification. In case we are not submitting, then we will not be subject to penalties. But this is for sure. Revised notification which has been submitted, it has become null and void. One more important thing is there. This important thing is the licensee, based upon the old criteria, one company, one business was subject to ESR, but they have not submitted the notification at the time. Now, based upon the same criteria, there are no change in the criteria in the revised law and revised regulations as well. So if the licensee is submitting the notification now the question arises, authority may apply the penalty. They will say, based upon the same criteria, you were supposed to submit the notification based upon the previous deadline, but you have not submitted. They may apply the penalty as well. There are chances. Okay, I got one more question. It means if exempted licensee earns income from the relevant activity, it is no more an exempted licensee. No, licensee, they have classified in the law. They said licensee is a juridical person, licensee is an unincorporated partnership, and if these two conditions are being fulfilled, these are licensee. Now these are exempted licensee, means these are the juridical persons, these are the unincorporated partnership which are earning relevant income but not subject to ESR. These are licensee, but exemption has been given by the government. We need to understand the essence of the law. We need to understand the reason behind the implementation of ESR. Then you will be cleared why these licenses have been exempted. And the reason are, We have discussed there was a tax evasion, there is a loss of revenue of 250 billion. These are the numbers given by the OECD. Due to this loss of revenue, due to BEPS, profit was being shifted, revenue was being shifted from the high tax jurisdiction to the low tax jurisdiction. And if you will see into this exempted licensee, they are being taxed somewhere. Like if a branch is out of UAE, means initial and basic essence is not being violated, these are being taxed. So in short, I can say these are the licensees which are earning relevant income. These are the juridical person, these are the unincorporated partnership. But specific exemption has been given because somehow I can say their income is being taxed anywhere, or they have only business in UAE. There are no chances of shifting the profit from high tax jurisdiction to the low tax jurisdiction. Hopefully, it will be clear. Okay, and one more question came. They are asking why they need to file a notification if this is the exempted licensee. Notification is required. Notification authority is not only asking notification. Authorities are asking you need to submit the notification. Along with the notification, you need to provide the evidence on which basis, what is the reason on which basis you have been classified as an exempted licensee. Your income is not subject to ESR. Okay, one more question is it possible to share the presentation for this webinar to our registered emails because it's too good? Okay, definitely I'll share. I have the email addresses. I will circulate the presentation. No problem at all. You're most welcome. One more question is there. How soon should we expect the filing link to Ministry of Finance portal because the deadline is 30th June is already passed. Okay, we have just discussed the decision would be applicable from backdated, and for this year, if for this year the timeline would be whenever the portal will be launched. I believe ministry definitely will give the certain timeline in which we will be required to submit the notification. And this is the first year things are being settled down, but in the future we need to stick to the deadline. Anyway, I think no more question from anyone. And if any, I can give my email address at the end of the presentation is given. You can take down the email addresses, and or you can drop us an email based upon the email addresses that we have already shared in our registration time. So you can take these email addresses as well. You can drop us an email. We'll come back to you accordingly. Yeah, you can drop us an email at info@crestcooper.com, and our team or I'll come back to you. Thank you very much for joining us. Take care. Thank you. Bye bye. Have a good evening. Okay, one more question is there. They said if, as per accounting standard, companies are not required to prepare consolidated financial report, but group is related by common decision maker or shareholder. Each company have independent license and companies are in trading business, still subject to ESR. If the company is a part of the VAT group and the group they have defined that the group is required to prepare the consolidated financial statement, and if the group is required to prepare the consolidated financial statement, and the companies are part of the group, then it will be otherwise. If the group is not required to prepare the consolidated financial statement, even these are coming under the common owner, I believe it will not be subject to ESR, but still might be the authority will keep it under the ultimate beneficial owner category. So being on the safe side, I will say that you need to go for notification, as well as you need to go for the test as well. This is my suggestion. In case required, we can take the clarification from the authorities as well. Thank you very much for joining us. Take care. Thank you.